Welcome back to Morning Movers, and Diane King Hall coming to you live from the floor of the New York Stock Exchange. Joining us now is Chris Versace, Chief Investment Officer at Tematica Research. Chris, thank you for setting up the week with us. I wish you were here in person. I wasn't going to mention anything, but I have the right cup today. You shamed me for not having a company man cup the last time, but I got it today. Okay, I digress. All right, let's talk about the week ahead, Chris. We've got a few earnings to chew on. We've got some economic data. I don't know if you had a chance to listen to my colleague Kevin Hinks earlier, what he calls like top tier economic data. So we got CPI coming in and PPI. What are you anticipating as it relates to CPI first?
Well, I think if we take a look at a couple things, first and foremost, we have to focus in on core CPI. That's what the Fed is going to be looking at. Therefore, that has to be what we're looking at. All indications are, whether it's the ISM data that we track or the data from S&P Global on the PMI front, we are going to see it tick higher. That's what the market's expecting as well. So no major surprises there. I think, though, Diane, the question is going to be how much hotter than expected is the number? We've seen, the inflation numbers ticking higher as a result of tariffs. We know the Fed's watching it. Therefore, again, we're watching it. But if we see it come in a little lighter than expected, I think we could see the market, trade higher. But I would counter, though, Diane, that in the environment we're in, coming off of the recent disappointing July employment report job revisions, that a hotter number, bad news, could actually be good news for the market because the Fed could be that much closer to cutting rates.
Okay, and then the expectation is largely that we will see a rate cut in September, so that could reinforce that view. What do you think all this means for the Fed ahead of Jackson Hole?
It'll be interesting because not only do we have the CPI and PPI reports this week, we also have tomorrow morning the NFIB small business report. That's going to give us another perspective on job creation during the month of July. And I think that, candidly, given the revisions that we've seen, we need every incremental data point that we can get. And I think as a result, we have to pay attention to that, probably more so than usual.
Oh, Chris, sorry. Let's talk a little bit about, sorry, I need to pivot for a second. Let's talk a little bit about the retail front. I know you've been across this. You say we have a bifurcated consumer. Where are you seeing strength and where are you seeing the spending pullback?
So where do we see the strength with the consumer? If we take a look at what Expedia said last week, we listened to some of the airlines for the back half of the year. Consumers still willing to travel. On the other hand, if we take a look at, the cut results that we've seen, over at Kroger or some of the other grocery stores, we see that consumers are continuing to trade down. And then we compare that against that, I have to say, simply wonderful Costco print for the July retail sales that they had. Clearly, we're spending on things that we want to spend on, travel, and we're cutting back where we can to stretch those disposable spending dollars so we can, again, spend where we want to spend. To me, it's going to be very good for not only Costco, but, some of those warehouse companies. Maybe it's good for, Walmart and Sam's. Maybe it's good for Dollar General. The companies I get concerned about are the ones that are kind of in the middle. Call it your targets. Where are they? I think that they're lost, to be candid.
Yeah, I mean, listen, yeah, especially as it relates to Target, it feels like they're having, just an identity crisis overall for a few years now. And it's almost like they can't get out of their own way. But we'll see if, in terms of when their numbers come out, I know we're a ways away from the retailers reporting results, if those July sales events were actually accretive to Target. Outside of, say, what we would expect to see from Walmart. Let's talk a little bit about earnings that we expect this week. Not a heavy week on that front. We've got CoreWeave coming. They've got deepening ties with the heavy hitters like the Microsoft and now Alphabet, Google. What's your expectation?
I think it's going to be a good report. You just touched on, a key aspect here. If we take a look at Microsoft and the expected ramp in their capex, second half of the year and into 2026 compared to the first half, that is rising. We know they have a very strong relationship with CoreWeave. We turn around and we take a look at Alphabet, that's also increasing its capital spending, and they have a growing relationship with CoreWeave. So I think the top line is going to be, very good. I think the difference here, though, is, remember, CoreWeave's a recent IPO. The company usually has pretty good expectations, 1, 2 quarterly earnings reports out. Now we'll have to start to see what they guide for the back half of the year and into maybe any early indication for 2026. But I think, Diane, when we step back, look at Microsoft, look at Google, look at Meta, look at Amazon and their rising capex, to the extent that CoreWeave doesn't deliver a good print, that could be disappointing.
Okay, and then, but to the extent that it does deliver, what do you think that signals for Nvidia, especially given its investment?
I think it's going to be really positive for them. If you sift through the CoreWeave financials and their filings with the SEC, we know that they have extremely strong ties to Nvidia. So it will be another positive data point. And look, last week we had good news from TSM with their July revenue report, Foxconn as well, both known to have strong ties with Nvidia. And then this morning, I believe Micron just upped its outlook. So you put it all together, and that AI trade still very much intact, still very good for Nvidia.
Okay, and then speaking of the AI trade, and another heavy hitter this week, Cisco on deck this week. What's your expectation as we lead into its results when we think about AI adoption, the ramp up there, and network demand?
So, when we take a look at companies like, ServiceNow or SAP, they are seeing that ramp up in AI adoption. So the way I'm kind of looking at it is, what's the follow through? Because as we see AI adoption accelerate, it's going to drive, capacity demands on networks. So that's what I'm going to be listening to when I think about Cisco. And I'm also going to be connecting the dots to Marvell because of their chip business in enterprise networking and carrier infrastructure. But the other thing with Cisco to remember is its presence in security. It's one of the top weighted names in the cyber ETF, ticker symbol CIBR. So to the extent that they have positive commentary there, that could help lift an ETF that has been under pressure recently.
All right. Thank you for that call out. We'll be paying attention to that one as well, then cyber. Thank you, Chris. That's Chris Versace, Chief Investment Officer, Tematica Research and Portfolio Manager of the Street Pro Portfolio.